Welcome everybody. Welcome to another recap of the week. We had a pretty good week. Decided to lower down my lot size. The only reason I'm lowering my lot size in August is because we went super hard in July, right? So needed to take a little bit of a break from trading. Was mentally drained, but decided to maybe continue on with smaller lot sizes and let's see what we can do. So the outcome wasn't bad at all. It was pretty good. They're around $1,737.46. Commissions $100. So what I'm going to do is I'm going to go over all the trades I took this week, and then we're going to try to see where the stops were, take profits were, how could we have done trades better and stuff like that. So starting off with the first trade was a loss. It was a $64 loss, the first trade of the first day. So let's take a look at that over here. So basically, when we came to the charts, this is what was happening. This 15-minute candle was bearish. We had this wick to fill, and then price was in momentum. The 30-minute candle was also bearish, and we were expecting price to continue down to this area right over here. Now, when this candle closed bearish, I had the idea that, okay, you know what I'm going to do? I'm going to enter a position on this candle, keeping the stops above the previous candle. So it kind of looked like this: 138, 2, 3, somewhere over here. Let's see where the entry was. Entry was at 271, right? 138, 271, right here. So TP was right here. The stop loss was above the previous 15-minute candle. So stop was around like 6 pips, and the target was like 14 pips to come down. And you can see here where it got stopped out. So this candle closed with no wick on the top. This was still the 30-minute candle closing, and then the next candle went up and it hit my stop loss. So that was the first trade of the week, would end up in a loss. So when this happened, I didn't overtrade. You can see right over here. And then the second trade was taken later on. This was the first trade, and then the second trade was taken. The second trade was taken somewhere right over here. So this was a $30 loss. It was taken at 138.329 around 8 a.m. 138.329. Let me see where that was exactly. All right, perfect. So when this kind of closed bearish, so we're like, okay, we made a low over here, we made a low, and now price should come down to retest this low, right? So I think one mistake I made was I went off of the 15-minute confirmation, which was right over here. So this candle closed bearish. As this candle was breaking the low of the previous 15-minute candle, I entered a sell, anticipating price to continue down towards 138.227, and the stop loss was kept above the previous 15-minute candle, right? Now you can see here the entry was at 138.329, and then the exit was before this candle closed. So look at this: 138.361, 138.361. This is where I closed my positions. The only reason why I closed positions here and not that price at stop loss was because if we look at this 15-minute candle, if we look at this 15-minute candle right over here, this 15-minute candle, it closed above these candles here. So this told me that, hey, maybe for it to continue moving down, it had to close like a strong bearish candle, but it closed like a weak bearish candle. So at that point, I was like, okay, you know what? I'm just going to close out my trade and I'm going to call out my day. I'm going to call it a day off. So you can see here, I took two trades that I had the same bias. My bias was sells. Overall bias was bullish. I think that was the one mistake I made as well. But I was going off the fact that okay, it may come down to retest this level. But again, looking at the first trade here, I think it was kind of like creating some sort of like a rejection area at like 138.245. So if you go to 30-minute time frame, let me just take a look here on the 30-minute time frame really quick here. So let's go towards the 10th. Okay, so here we go. We're right over here. So I guess this area was acting some sort of like a resistance, turned some sort of like a support. So maybe that's why it wasn't working. Right. Also, the sell was taken based on a 30-minute breaking the low, and once the 15, even though this 30-minute closed bearish, the 15-minute candles gave me those 15-minute candles gave me confirmations that okay, maybe price is not gonna continue moving down. As you can see, the candle closed with a small body, right? Weak bearish body. So I think these were good confirmations, but I mean, I was trading against the trend. Let's be realistic, So I called it a day, didn't really overtrade, and then I moved on to the next day. So let's take a look at that over here. Okay, so this trade was taken the next day, Tuesday, the 11th of August. This was taken at 139.070 around 6:30 6:30 a.m. Eastern. So this was taken on. So basically, what was happening was we had a minor resistance on the 15 minute, which broke right over here. So I was like, okay, you know what? Since we broke this resistance, now there's going to be a higher chance of price to continue moving bullish because, like, where the trend is bullish and it should work, right? So this candle closed, and then when this 15-minute candle broke the high of the previous 15-minute candle, right over here at 139.070, I took a buy. I took a buy. My stop was kept below the previous bullish candle. So you can see right over here, the buy was taken at 139.070 right over here, and the stop loss was kept at, let me just do this, 139.070. The stop loss was kept below the previous candle, and the TP was somewhere at like 139.200. So it was like almost like a 10 pip stop loss and a 13 pip TP. So I got closed out at 138.980. I decided to close out my position when the 15-minute candle broke the low because, hey, like, you know what? If I'm going to have a bias and if my first trade gets stopped out, I'm going to give my trade two chances, right? So this was the first chance. I didn't want to hold a drawdown because that's not how trading is done, right? You're supposed to keep your losses small. So I closed the trade over here, and then we moved on to the next trade, which was actually a win. This trade was actually a win, so we're going to talk about that right now. Now, this second trade I basically had 3 positions running on this second trade idea, so which was again a buy because I want to give my bias like another chance. So basically I had a 138.985. I entered somewhere over here, 138.985, entered right over here. My stop was below the previous candle. I was expecting price to come up towards 139.200, right? That was my TP right over there. Now, if you look at the positions, one was taken at 138.985, right? The second was taken at 138.994, somewhere right after that. So once this 15-minute candle, it broke the high of the previous 15-minute candle, I brought my stops below the current 15-minute candle, right? Because if price is going to continue moving up, it has to make higher highs and higher lows, and if it's going to break the high of the previous candle, they should continue moving bullish. And also because we had this really big exhaustion candle, so I was like, hey, like, you know what, I've already taken my one trade for the day, which was a loss, and now I'm giving this second chance to the same bias. I should be very careful in my stop losses. So I put my stops at below this candle, and as price started to move up, I took another entry at 139.067, somewhere over here. So when I took my second entry at 139.067 right over here, this entry was based on the fact that once this 15-minute candle was breaking the high of the previous candles here. So the stop was kept below the current candle, which was around like 10 pips, right? So, and then, well, you can see I took profits at 139.072 as we were coming up to this high, 0.72, and then 0.84, and then the last position, it kept on running till 139. Well, it came towards like 139.200, but I closed at like 139, what was this, 139.166. So that played out really well. That played out really well, so was pretty happy with the result. And then after that, we looked at the next trade. Next trade was actually a swing that ran furthermore. So since price was bullish on the daily, 4 hour, 1 hour, we were obviously looking for buys, right? So this is where we closed the first 3 positions before the NY opened, and then NY opened right over here. So NY opened at this 30-minute candle, which let me just denote by a rectangle here. So this was a 30-minute candle which opened right here with the NY open, and the candle after that, it kind of like went down, did a little deeper retest. At this time, we weren't here at the market. So basically looking for targets, we have to look left, right? So let's take a look left over here. So when we go left, and keep an eye on this red line here, right? When we look left, what we see is that this was a potential, like a rejection area around 139, 400, 430. And if we just bring this rectangle all the way here to the right-hand side, let me just bring this out all the way out here to the right-hand side, just like that. So when we, okay, perfect, yeah. So we brought it right over here. Now, there was a period of consolidation, right? You can see that, you can look at the time at the bottom, the pre-New York had a little bit of volume, we had retracement, we had more volume at pre-New York, and then price started to range, because when you're looking at the New York session, you have to understand there's going to be a period of like a trending market, then there's going to be a period of like ranging market, and then there's going to be a period of another trending market, right? So we had a period of trending market a little bit, like, where price moved up, where we took our initial buys, which was in pre-New York, and then we had a little bit of a consolidation, and then we moved into pre-New York. Oh, no, I'm sorry. We moved into the NYC Open. The equities open at 9:30 a.m. Eastern. So when this 30-minute candle closed bullish, I was like, hey, like, you know what? Maybe this little move down was a little bit of a fake up, because if we're moving up, and if we know that volume is going to come into NYC Open, like the next part of the volume, maybe this is going to be a good opportunity to maybe take another buy here to maybe capitalize on this price moving up. So this is where the second buy, well, the third trade was taken in that day. That was obviously like another one lot. This was taken at 139.122, so somewhere around here, 139.122, right over here, right? So let me just do this. 139.122. Stop loss was kept below the previous 30-minute candle, which was around yeah, so it was like 11 pips stop loss. TP was almost like 30 pips, 35 pips, and you can see price ran to target 139.46, and 139.467 was where I closed this position. Right now, after this trade, we had a little gold trade. Now gold was moving. So basically, let's talk about this trade now, backing in, right? Because this is a very good trade. We made around $324. So this day, so look, the first day had 2 losses, right? The second day had the third loss. Now 3 losses in a row, and then capitalize on the trending market, because when market is trending, it's really like, if you can manage your risk, and if the market is trending and this is going to be volume at a certain time, you can actually add positions. You can add position and really capitalize on those gains. It takes a little bit of a practice, it takes a little bit of experience and confidence as well. So that goes hand in hand. Now let's talk about this gold sell I had, which I didn't really expect it to continue as much as it did, but gold was moving a lot at that day. I think we covered that in the live stream as well on the 11th August. So let's take a look at that here. Okay, now, before we talk about this trade, I really want to talk about the volume in gold and the way gold has been moving. Gold has been moving with a lot of volume, right? Which means that you're going to get like 40 pip 15-minute candles. You're going to get like 80 pip 30-minute candles. So there's a lot of volume in gold. So whenever you're trying to trade gold, you're making sure your lot sizes are small, because if there's a lot of volume in gold, and gold has like your stops are going to be pretty big, right? So you have to make sure that your risk is smaller and your stops are wider, because that way you can really capitalize on gold. So what's happening over here now? This candle was bearish on gold. The next 15-minute candle closed like a weak bearish candle, but there was a lot of momentum in gold moving bearish. There was a huge zone down at 1941, which gold had to tap into. So I was like, okay, like, you know what? I'm going to try to open a sell position. And I'm only going to use a 30-cent lot. Not a 1 lot, but a 30-cent lot, because I want to risk some of the gains I made that day. Some of the gains, because that day came out to be really good. So what I did was I took a sell at 1963, placed my stops above the previous 15-minute candle. So now you can see, right? The stop was around 45 pips. You can see the 45 pip stop, even though this looks like a very small candle, but no, man, this is a 15-minute chart, and this is a 45 pip stop. And like, instead of hitting, so if this would have hit my stop loss, I would have lost around $150, not a big deal in the grand scheme of things. So this actually ran down to 1954. I closed at 1954, got at like 70 pips. How much was that? 1954, somewhere down over here, like 80 pips, 75 to 80 pips, that's what we got. And then at that time, basically called it a day, right? So it made like $251.70 on that trade. Now let's talk about the next trade. Next trade was taken the next day, right? So in this day, executed on 1, 2, 3, 4 trading ideas, right? 4 trading ideas. One was a loss. Second one, these here, they were wins. Third one was another win, explained it. The fourth one was gold. We were talking about it on the stream as well, and that's why we took the trade, and it actually worked out pretty well in our favor. Also, gold was coming down, so it worked out very well. And that was the day when gold fell. Oh, I remember that. That was the day when the daily candle fell a lot. So now moving on to the next day, this was a trade taken on GBPJPY on a 1.5 lot, because now since the profits were increasing, I was like, okay, you know what? Let's just kind of like leverage it a little bit more. Let's like open up like 50 cents more on the 1 lot I'm currently using. So let's talk about that trade right now. All right, so this trade was a loss. Actually, what was happening was that price was coming down. So we were waiting. So when I came to the charts, price was somewhere right over here, right? Price over here, price actually made a high, right? Price made a high over here. And we were looking to see that, okay, like, you know what, since we're trending up, price has made a high. So what we got to do is we got to wait for price to come down, create a support, and then take a buy for price to continue up to retest this high. So basically what happened was that when this candle came down, we kind of like formed this bearish candle, and then this bullish candle formed. Once this bullish candle formed, this is where I entered a buy. You know, as this bullish candle was coming down to a close, I entered a buy at 139.266. So somewhere over here, 139.266, a long position 266 right over here. Stop was kept below the 30-minute candle, and the TP was right above the high at, like, you know, 139.400. So you can see right over here, 139.266 got the entry, and then the exit was almost at the close of that bearish candle right after that. So the exit was at 139.203, 139.203 right over here. Exited at 203, right? As this candle came to a close, well, it was coming down to a close because you can see at the time the trade was closed 5 minutes before this 30-minute candle closed, right? So my stop was originally down over here. So it doesn't make any sense for when you have confirmations that price is not going to go your way, because for price to continue going up, I wanted this candle to close bullish, right? Because if you have a bullish candle, there's a higher probability for the next candle to go bullish as well. But in this case, it didn't really happen, you know. So candle closed bearish. I identified that as a failing trade. So if you look, I had a 1.5 lot. My original risk was $150, but I closed it before because I saw the signs, man. I saw the signs, so I closed at $89 negative. And then there was another trade taken right after that, around, like, you know, after London closed, which also ran for like a lot of pips. So I'm going to talk about that right now. So basically what happened was, this second trade was taken at 139.274. It was around right over here. And the whole idea was that the same thing, right? We had a volume in pre-New York, price came down. We had a little bit of a consolidation, New York open, no volume, consolidation. We moved into NYC open. Now, since the trend was bullish and we had this candle closing bearish, I saw this as a potential sell. You know, I saw this as a potential sell for price to go down, but hey, listen, I need to stick to my rules. My rules say that if I'm going to have a bias, I have to stick to that bias, unless otherwise there's a very strong confirmation that price is going to go against you, right? So this is what happened. The candle London closed, before London closed, we had a huge exhaustion all the way down towards 139, and price came back up and closed back bullish. So this is kind of like the trade was right over here the previous day, right? This is kind of like the same exact setup since the previous day. So listen, price always does the same thing over and over again. I recognize the same thing happening over here after London closed, so I executed a buy once this candle was breaking above the highs. Well, it broke above the high of this candle, it broke above the high of this candle here as well. So as it started moving up, I'm like, hey, listen, like, there hasn't been volume in the market for well, there was volume in New York. There was no volume in New York Open. There was no volume in NYC Open. What are the chances there's going to be volume in after London closed? You know, so this was something I was practicing. I've been looking at for a very long time. So this is where I took this trade. So this was taken at 139.274. Let me just put this long position on 139.274. The stops were kept midway in this candle. It wasn't kept all the way down over here, but it was kept in the midway of this candle, and the TP was somewhere over, like, you know, 139. I had like 139.650, somewhere up over here, some 139.650 basically had the TP. So price ran 139.274. This candle closed bullish. When this candle formed, I was like, okay, you know what? Candle's now forming bearish. Next candle was also trying to form bearish, and I was like, okay, you know what? I'm gonna wait for a candle to maybe do form like a support. So once we had this bearish close, I put my stops at break even. I didn't secure positions. I was already up. I was using a smaller lot sizes than my usual 15 lots or 10 lots. I was like, okay, you know what? I can probably make it. Try to see if I can swing this trade, right? And then I remembered, hey, like, you know what? I don't really swing trades. I don't really swing trades. So I have to stick to my rules. I stuck to my rules, and then I closed at 139,480. 139,480 was closed right over, yeah, somewhere right over here. Yeah, 139,480 was closed right over here. You can look at the time. This is 11:30 a.m. Eastern. Look at the time over here on MetaTrader. This is 1800 hours and 45 minutes. So this was a really good trade. Went up to like $289.07 profit. Um, After that, we move on to the next day. Next day was a pretty good day, so we're going to talk about that right now. Um, Before we talk about that trade, which netted me $641, right? Before we talk about this trade, I really want to talk about the importance of the higher time frames and what really led me to take this bigger trade, right? So when we're looking at the daily chart, this is the daily chart right over here. And if you look on the daily, daily was breaking above this 138,750 level, right? If we're looking left, we have like a rejection at 139, 752, and then we have a number at 140. So the idea was that, okay, can we get price towards 140, right? Can we get price towards 140 or not? So that was basically based on the daily time frame. So now if you look at the date over here, this is the 13th. This was taken on the 13th August, right? So this is the 11th August right over here, this candle. This is the 11th August. This is the 12th August. So we wanted this daily candle. So this daily candle was basically the trade to continue moving up, right? So when we're looking at the higher time frame daily candle trade, we want to make sure that we find some sort of a supports formed on, let's say, the 4-hour time frame, or like a really strong support on the 1-hour time frame. So for that, we're going to go down to the 4-hour time frame, and we're going to take a look at that scenario here. So basically what was happening was when we had this candle. So when we had this 4-hour candle, this was the New York session 4-hour candle, which opened at 9 p.m. and then closed at 1 a.m. Eastern. Now, once this candle was closing bullish, right? So I'm going to talk about the 1-hour candles at this time here as well. So when this candle was closing bullish after this weak-ass bearish candle on 4-hour, we had formed support, right? We had formed support on the 4-hour since this candle was closing bullish, and I was really looking for this trade to continue moving up. Now, sometimes, guys will say, okay, well, what about this resistance right over here on the 4-hour time frame? Well, to tell you the truth, this resistance does not really matter, because what matters is that price was trending bullish on the higher time frame, and if you're going to have a higher time frame confluence there, the smaller time frame confluences will be broken as price starts moving, right? So this was not the case. The idea was for the daily candle to continue up towards 139,750 and then all the way up towards 139, 900 and 140. That was the whole idea. So now let's take a look on the 1 hour. So we're going to keep an eye on when this next 4-hour candle was opening and when this last 4-hour candle was closing. So this is the low of the 4-hour candle at 139,280. So keep this in mind, 139,280. Keep that thing in mind, because that was where the stop loss was. So if we go down to the 1-hour time frame, and when we look at this chart, now there's a lot of confusion here, but when you keep the 4-hour in perspective, when you keep the daily in perspective, all you need to know where the stop is going to be. So if you remember this price 139,280, the stop was below this 4-hour low. So when we had this candle forming up, and then around 1 a.m., when we had a little bit of a retracement, I took an entry at around 139. What was this? 139,339, 139,338, right? So 139,338 was the entry, somewhere right over here. Stop was kept below the previous 4-hour low, which was around 7-8 pips. It wasn't that big at all. It was a pretty small stop loss, and my target in my mind was 140. I was like, okay, you know what? I'm going to take this trade, and then I'm going to go to bed, and when we wake up, we should get a pretty good trade. So this was the whole idea right over here. Now, when you map this out on the 4-hour, this is what it's going to look like. Check this out. See the accuracy? This is proof. This works. You just gotta. I would never catch these trades ever. This year is the year where I started putting in practice everything that I saw happen the year before and the year before that. I missed a lot of moves. I used to miss a lot of moves, but you know what I would do? I would put my head down. I would do exactly what I'm doing right now. Go over the trades, go over the missed trades, and write down how could I've executed the trades. And now I'm executing on it. So you can see the entry was at 139.338, and then the entry was closed when I woke up in the morning. So if you look at the time, this is 1300 hours. This is 6 a.m. 6 a.m. I woke up. Price was hovering at around 139. What's this? 139.795. 139 like 795 right over here. You know, I was up about, what's this? 795. It's up like 44 pips. You know, I was like, okay, you know what? Probably gonna close the trade. My trading is done. So this was like a 7 pip stop with a 44 pip game. Not bad, man. Not bad. So I closed the trade, and then that day I didn't really take a trade. I took no trades after that. That day, live streams were just chilling. We didn't take any trades. And then you can see the date we went to the next day, right? So let's talk about that next day here. So this trade got me around like $641. So let's go to the next day over here. Okay, so we came to the charts here. The first trade was at 139.682. So now again, you know, I had a gain from the previous day, so I decided to increase my lot size. You know, increased my lot size to 1.75. Increased it to 1.75, and now the first trade was a little bit of an impulse entry because, you know, the trend was bullish. We were moving bullish, and I thought, hey, we can continue on towards, you know, 140 again. So right now we had a little bit of a retracement, and price was coming up. So when I came to the charts, let me just remove everything here. So when I came to the charts, we had a support forming at 139.400. You know, we had a support forming, we had another resistance forming at this stage on the 30-minute time frame. So as this candle was breaking the high over these candles, looking left, we had a clean candles here going all the way up towards 139.850. So if we measure this range down from 139.660 to 139.840, this was like a 20 pip range, you know. So I think 20 pip range was a pretty good range to catch like 10 pips, 12 pips. So I took an entry at 139.682. So the buy was taken at 139.682, somewhere over here. The stop was kept below the previous candle, and the TP was obviously, you know, kept at almost like 18 pip TP, right? So once price went into like, you know, into the vicinity of 139.800s, you know, at that point I was like, okay, you know what? I may want to put my stops at break even, and I may want to take some profits because, you know, we're approaching an area which was rejected before in New York in the Asian session. You can look at the time at the bottom in the Asian session, and then it was rejected again the previous day. You know, so there were 2 rejections at that point. So when there were 2 rejections at that point, you got to be a little, you have to play safe. You know, so I closed the trade at around like, you know, got like 10 pips out of it. It was like $188.57 profit there. So if you look at the losses, Losses are really small compared to the wins, right? You have to keep losses small. I've talked about these losses here in this video, so re-watch some parts. So then the second trade was taken with really good confirmation. Second trade was another buy because have to keep the bias the same, right? The same bias works all the time. The second trade was taken at 139.860. This was taken somewhere over here, 139.860, right over here. As this candle was breaking the high of the previous candle, so the buy was taken at 139.860 right there. As it was breaking the high of the previous candles above here, the buy was executed at 139.860. The stops were kept below the current candle, not below the previous candle, but below the current candle, because if this candle is breaking the highs, it should have no business at all coming back down to, like, you know, break its own low, so to speak, right? So this opened at 139.860, ran towards 139.950. 956 is the point where I closed the trade. Looking left, we were approaching some sort of a resistance area at around 140. I remember we did a highlight of this trade as well. We brought out the horns, and it was like an amazing day, right? So closed at like 139.956 and called it a week at that point. Just called it a week. Got like made $1,737.46 in profits. I hope this was educational. I hope you can learn something from it. So yeah, man, share, like it, like this video if you really enjoyed it, subscribe, and obviously, you know, share. So perfect. We'll see you all Monday morning in the gulag. New York live streams. Adios.